Well, another test to the market's momentum this week is Nvidia. The AI darling is announcing its first quarter earnings results after the bell on Wednesday, capping off reports from America's biggest tech giants. Nvidia shares have been performing well, up 90% this year, and its earnings report will certainly impact the AI trade. So, how can you set yourself up for success ahead of these big results? For more, I'm joined by David Wagner, who is the Aptus Capital Advisors Portfolio Manager. David, great to see you. Thanks so much for hopping on. Absolutely. Let's dive into this one here. Nvidia, the bellwether for the AI trade. What is the anticipation here, and is this for what we're considering and expecting to be another Goldilocks type of report they're going to need to deliver? Are they going to be able to hit on all the metrics that Wall Street is looking for?
Yeah, Brad, obviously you're right. Nvidia is the linchpin for the AI market narrative that we've witnessed for basically the last 12 to 16 months. But really looking at this report, I'd actually probably flash back to the report just 3 months ago. I think that there was a lot of optimism and exuberance really heading into the Nvidia report just 3 months ago, but it really became a no style type of event. That's kind of what I'm expecting out of this quarter right now. I mean, we've been so accustomed with Nvidia having some type of beat and raise and an unbelievable revenue beat on the top line mechanism. It's just become standard. But that's also why that this is one of the most crowded names out there in the market right now. So I think that the market's pricing in about an 8 to 9% move on the upside or the downside if you look at vol levels. I would probably be selling some short calls on this because I just don't think that a lot of the exuberance heading into this report is actually going to be shown in the stock price. I think it's just going to be a 3-wood right down the middle of the fairway. It's going to be a beat and raise, but I think the commentary that we're going to see from Jensen itself, especially on the transition from the Hopper to Blackwell, is really what's going to be the investor focus on Wednesday night.
All right, I can tell you while we're watching the PGA Championship over the weekend for sure, David. So that's a good thing, good one for Xander.
Thanks for noticing.
Ultimately, one of the huge things that investors have to consider is where Nvidia sits in terms of its value for any investors that are considering kicking the tires on buying in versus some of the rest of the AI annex names within the market right now. What's your evaluation there?
Yeah, Brad, obviously that's the big question right now. And it really reminds me of Bill Gates' observation that the impact of technology is often overestimated in the first 2 years, but then underestimated over the next 10 years. But with that said, yeah, Nvidia is absolutely going to incur some type of demand-driven air pocket over the next few years. But that really doesn't mean that the stock's overvalued in my mind. I think we need, as investors, need to be focusing on the denominator, the earnings aspect of the PE multiple you're just talking about, and not the numerator with the price. Now, this call on valuation was much easier heading into this year when Nvidia was trading at 30 times forward earnings, which was about 15 turns below its largest peer, AMD. But not only that, it was trading very much in line with Intel, which is a company that, in my mind, continues to let investors down via no technological advancements over the past few years. But if you fast forward to today, like Nvidia does trade at a premium to Intel, it still trades at a discount to AMD. So that makes me believe that this stock right now, trading at 37 times forward earnings, it's going to be a little bit more fairly valued. But like I said, I should state that investors should not focus on the valuation for Nvidia right now. They need to focus on the revenue growth and the continued demand for their products and the transition from Hopper to Blackwell that should occur later this year. That should be the focus here. If the stock were to materially drop, I think it's going to be due more to an earnings air pocket or an earnings whiff than just simply valuation.
We were just taking a look at the year-to-date chart for Nvidia. Of course, a landmark run for itself over the course of the past 52 weeks and during 2023. And then here, year-to-date, adding on another 90% in gains here. When we think about more broadly for where within the AI trade is still has the most upside potential, whether that is the chips, whether that is the language learning models that are going to be set to come forward, whether that's just the utility companies that are set to make bank because of all the different data centers that they're going to have to operate as well. Where is the most compelling part of this?
Yeah, I agree with you that it's going to be more on the picks and shovels aspect of the trade itself. So that still will be in, the intangible aspect of the chips themselves. But again, on the utilities, I think the utilities is somewhat a misnomer because it's really caught my eye here lately because, utilities and rates, they should have an inverse correlation, yet utilities have really caught a bid in the face of higher rates. But utilities, they're very much a regulated sector within the S&P 500. But I think there's other ways to play proper utilities that are not as regulated, more on the private side, like Quanta Services, PWR. Basically, they're a private company that deal with the transmission lines of going from the utility location itself to the data centers. That's not regulated by the government. They have basically a backlog that goes out 10 years from now, and they have a lot of pricing power. It's a great company. Valuation may seem stretched if you look at it, versus 5-year history, but I think it's very much warranted for the amount of work that's going to be really coming due, not just in a year or two from now, but 10 years down the road, because these are projects that just can't be planned 1 year out. They're planned 4, 5, 6 years out. So there's a lot of visibility into the backlog of this company. And I think that's another great way to play this AI narrative outside of, your AMD, your Nvidia. But I'd also look at like a stock like Vertiv.
We were talking on Morning Brief about the number of companies that were mentioning AI on earnings calls in this most recent quarter, and even going back to Q4 of last year, and the stock price increases that they've seen thereafter. But what is the warning sign that investors should be looking for if there's too much exuberance from some of the companies that doesn't seem like it has anything to do with AI?
Yeah, I guess there's that phrase pay to play, but when it comes to a lot of these earnings calls, it's say to play. They want to say AI and they think that they can play in that narrative itself. But you have to look through the forest through the trees here to see who are the actual beneficiaries. But coming out of earnings season, Q1 2024 earnings season, Brad, I think my biggest takeaway was actually the amount of spending that is going to be incurred by the Magnificent Seven names moving forward. I mean, obviously, the absolute number was supposed to be very high, but I think a lot of people are really taken back by the actually Capex revisions from this past quarter. I think the Magnificent Seven are expected to spend $328 billion just in 2024 on Capex spend, and that's basically through AI. So my big takeaway here is, I think over the last year, the market has focused on the Magnificent Seven and their profitability. I mean, just look at Meta itself and its year of efficiency. But the market's going to have to really start to focus and recognize how it's going to warrant the valuation of these Magnificent Seven names as we transition from, the years of profitability and focus on ROIC to the transition to this really heavy Capex spend that's really coming out of these seven names, and see if that can actually transition from Capex spend into incremental revenue growth and economies of scale through profitability, like through return on invested capital.
Yeah, some supreme spending that they're putting forward. We'll see if it could actually generate some magnificent returns here going forward as well. David Wagner, always a pleasure to speak with you and get some insights. Aptus Capital Advisors Portfolio Management. Good to see you.
Great seeing you, Brad.
Absolutely.